Welcome to everyone tuning in. Thank you for joining us today. My name is Jillian Perkins. I'm the Director of Communications at Arnerich Massena, a Portland-based investment advisory firm bringing our unique and disciplined process and philosophy to nonprofit endowments and foundations, high net worth individuals and families, and corporate clients. Welcome to Part 3 of our Impact Investing series, in which we're exploring impact investing themes. Arnerich Massena has been focusing research efforts in this area for more than a decade now, and we're really excited to be offering our clients a complete multi-asset class portfolio with an impact focus and one that we think has great outperformance potential. So in our last two podcasts in this series, which I would encourage everyone to listen to, we first discussed our history and the background of our research, and then what impact investing is and why investors really should be excited about this. So today we're going to go to the next level and diving into the specific impact investment themes that we have identified as potential opportunities for investors. So here to talk about it with me are Bryan Shipley, our Co-CIO, and research analyst Mitch Vogt.
Thanks for having us, Jillian.
Thanks for being here. So both of these gentlemen have been intimately involved with our impact research and portfolio development process, and we're excited that they are here to bring their expertise and insight to the subject. So it's my pleasure to introduce Bryan and Mitch. And I just wanted to quickly go back, before we dive into our impact investment themes, can you guys provide just a short recap for people on what impact investing is, how it relates to ESG, and how we chose these themes that we're going to talk about today?
Yeah, definitely. So ESG is really has gained a lot of traction and is somewhat of an industry buzzword, but it's not exactly how we're approaching impact investing. So I really see a spectrum of different opportunities in this space. There's the far left, which is ESG, SRI investing, which isn't focused directly on making a positive impact, but mostly on scoring companies and avoiding those making the largest negative difference. And then if you go all the way over to the far right, there's mission-based investing, which is making a positive difference in the world, but tends to be concessionary on investment performance. And we believe being concessionary on returns is unwise for clients because that leaves less capital to achieve what's at the core of your mission and your beliefs. So in the middle and at the sweet spot is thematic investing, and that's the area we believe our portfolios are aligning with, and this is where we're making a positive difference by investing in what the world needs without being concessionary on returns. We're focusing on themes that are ripe with innovation but lack the capital needed to really fuel those ideas that are going to make that positive difference in the world. These are areas with the winds at their back, poised to capture on trends that will make the world a better place and benefit the companies operating in the space.
That's great. So to follow up on that, we've identified 4 of these main impact themes that Mitch is talking about. Food and agriculture being one, water, resource efficiency, and life sciences healthcare. So let's just jump right in and start talking about, I want to start by talking about food and agriculture and water. Although we look at those as separate themes, they're pretty closely tied together. So tell me about why these are significant themes and what opportunities you're seeing in these areas.
Definitely, yeah. So just to lay out the case for investing in water, 2.5% of the water in the world is fresh water, and less than 1% of that 2.5% is available for consumption. Much of that is in glaciers and snowfields and the like.
Wow.
Currently, 50% of the water in the developing world, so not U.S., but think more third world type countries, is lost due to insufficient or outdated infrastructure, which results in leaking and loss from evaporation and other types of loss. But every 90 seconds, a child dies from water-related disease.
This is jaw-dropping.
Yeah, some pretty crazy numbers. And just to frame the investment case, demand for water is expected to grow by 40% in the next decade, and that growth is largely due to industrial use and agricultural use. Human consumption is only really a small portion of water consumption.
Puts things in a different perspective.
Definitely.
So different ways to kind of take advantage of this opportunity. Really, water kind of cuts across everything. It's such a important use in industry, obviously for consumption and sustaining life. Water really plays in so many different areas, and so we've found opportunities in public markets, private markets, but it also extends into agriculture and thinking about how unappreciated the importance of water is in our life and how it's probably not adequately priced or appropriately priced relative to its importance in all the facets that I just mentioned. Just to give some context and some examples of different ways we've gone about deploying capital within the water space. Within private equity, there was a company that we identified that is headquartered in a pretty water-stressed state in southwest of the United States, and they have developed a technology that basically draws water vapor out of the air that's consumable for humans. And so this is an opportunity that we don't necessarily see tremendous application in developed markets, but it's really thinking of areas that are water stressed in sub-Saharan Africa, or you think of what happened in Puerto Rico a while back with the hurricanes and how that kind of wiped out just general water infrastructure. And so these are kind of modular panels that you can really kind of drop into certain places that have gone through some kind of natural disaster, and you can actually have consumable water basically immediately available for the population.
That's fantastic.
And the other really interesting thing is these aren't reliant on the grid. So you can really drop these in anywhere where energy doesn't have to be present. So it actually has solar panels on it to draw power to kind of create that opportunity to draw water vapor out of the air that is consumable. So a really interesting opportunity.
Wow.
That we identified early, and it's been a great company for us. And the really cool thing that we see coming out of this is as this company has kind of matured and grown, it's kind of gone on to future financing rounds. And in the most recent round, we've seen really predominant endowment foundation clients taking a step into this space. And this is where, frankly, I think Arnerich Massena has always been that forward-looking firm, and this is a perfect example of our firm identifying a great opportunity that's being recognized by the overall market with capital that's ready to back it and really kind of take it to where it really could be.
That's too appealing to miss, and unique in terms of the technology and opportunities and infrastructure, and wow.
Yeah. Another example, again, private equity, but this is more from an agricultural standpoint, is we've looked at opportunities around agriculture in water-stressed states where clients can invest in really kind of compelling opportunities where there may be a water-rich farm that's on the edge of a very rapidly growing metropolitan area that hasn't necessarily thought through some of the water challenges that they're going to face in the future. And so it's kind of getting in the path of that growth and having an asset that, again, isn't recognized by the market that we think will be really compelling from a valuation standpoint and a return standpoint going forward. But in the meantime, while these populations are growing and kind of figuring out what they're going to do for those water needs, you have an agricultural farm that's producing some kind of crop that's desired by the marketplace, and clients can generate a pretty interesting yield off of that agriculture. And so you get the income coming from that in real time. You have the appreciation of agriculture in general as an asset class, and then you kind of have this asymmetric opportunity on the upside if and when the marketplace really determines the true value of that water that asset holds.
Yeah, Brian, if I may, I'd like to jump in here because this purchasing of farms is a really interesting opportunity that I think is very exciting. A lot of the water rights were assigned based on legislation from the 20s or 30s, and some of them are even use it or lose it type rights. And so these farmers have absolutely no incentive to be more efficient with their water. And so oftentimes we're finding that there are markets like the alfalfa markets that are fairly saturated. We don't need more alfalfa in the United States, but are very water-intensive crops that have somewhat of a low yield. So what this group does is they go in and they buy up those farms, and they repurpose for something more of a permanent crop like almonds, and then they fallow the land sometimes and use that water for higher use.
Wow, so these are really creative ways of taking advantage of these opportunities.
Mm-hmm.
Yeah, I mean, farmers, we shouldn't think of them as unsophisticated investors or not recognizing the value of the assets that they own. And so, they're going to lean towards what's in their most economic best interest. And so, to Mitch's point, alfalfa was a crop that was grown tremendously, particularly in California, that a lot of that was shipped over to China, which has its own kind of water-stressed aspects of it. It needs to solve long-term. And again, this is another area of why we think water is such a compelling asset class. This isn't just a U.S. problem. This is a global problem that every country is going to need to solve for. And then to Mitch's point, where water hasn't necessarily been used for its highest and best purpose. Again, it's been more driven by economic interest, but new technology has kind of delivered ways to be very efficient with the use of water as it pertains to growing crops. So instead of thinking of an alfalfa field, which was basically flooded to provide the water needs for that crop, today there's drip irrigation systems that are just so focused on delivering the exact amount of water that a crop needs and really not wasting anything above and beyond that. That's are ways to play it, not only from an ag standpoint, but also there's public companies that are developing these technologies and these systems that we can take advantage of from a public market standpoint.
Yeah, and just to bring the conversation back full circle, we said at the beginning that only 2.5% of water in the world is fresh water, and I think this poses an opportunity because desalination is something that is discussed in depth, and frankly today is just not at the place where it makes sense from an economic standpoint. I think Australia had a big program where they spent tens of billions of dollars on a ton of desalination plants, and they've opened a handful of them and have closed over half of them already. And so I think this is a big opportunity where research and private capital can go into creating a solution, but right now it's just potential. It doesn't make sense from an economic standpoint.
Yeah, just to kind of dovetail on that a little bit, the power requirement it takes to turn salt water. So often these desalination plants that Mitch is referring to sit right on the coast, and the power it takes to turn that into consumable water is very intensive. And so that's exactly why it's pretty cost prohibitive to not only develop these, but just maintain them. And then you have to deal with kind of the byproduct of desalination, which is this really salty brine. And what do you do with that? Creates its own challenges. So one other thing that we'll touch on as it pertains to water, and this is around kind of infrastructure in particular, and really focusing on getting the most that we can. I can remember a number of years ago that we were evaluating a long-only water manager, and we got the opportunity to actually tour wastewater district in Orange County, so Southern California, where basically they take wastewater from municipalities, from residential consumers, and they actually turn that into drinkable water.
Oh my goodness!
So shower water, sewage, sinks, all of that. It sounds
gross.
It's fair, but at this plant, it's amazing the amount of infrastructure and technology and design that went into really taking what is gross into something that is drinkable.
Yeah.
In fact, at the end of the plant, at the end of the tour, they have water faucets flowing with water that is consumable. And I took a drink, and it tastes like water. I mean, their slogan is
brave.
Their slogan is "It looks like water because it is water," or something to that extent.
Remarkable.
But it's just amazing that technology has taken us to a place where on one site you can really take waste from human consumption and turn it into something that we all need. So just another kind of example of how to take advantage of this opportunity through public markets as well.
Yeah, and just to maybe close with one last figure, it's estimated that there's going to be $7.5 trillion that needs to be spent to maintain the status quo by 2030. Currently, about 500 billion is spent on water, and so that's a 15 times increase investment. And so that provides a lot of opportunity for companies who are leaders in this space.
Oh my goodness. Well, that's fantastic. We're deploying that private capital for actual solutions and generating return out of it.
Definitely. Yep.
So we've talked about water and a little bit about how agriculture plays into that, but can you talk a little bit about food and what's happening in the food space?
Definitely. So food, very important. The world population could be pushing 10 billion by 2050, and that's a lot of hungry mouths. So agricultural productivity will need to increase. It's estimated by about 60% in order to meet this need given current land and resources.
Oh my goodness.
Something else as we look at that growth is obviously greenhouse gas emissions. About 25 to 35% of greenhouse gas emissions come from farming. Could be totally butchering those numbers, but I thought I did see that. And these can be improved with more efficient crop management practices.
Mm-hmm.
Brian, do you want to just speak about how we're accessing food and agriculture?
Yeah, again, it's largely a play on agriculture in and of itself, but it's not necessarily just owning the farmland. It's thinking through the entire supply chain of food. So a lot of the opportunities that we see, and this particularly comes mainly through private equity, is companies that not only own the farmland itself, but have thought through how they can add value throughout the supply chain. So that comes in the form of packaging, and then kind of aggregating smaller pieces of farmland, or having cooperative communities kind of coming together and building some scale to their distribution system that allows them to kind of wring out extra value and incremental return for investors. The other thing that I would point to is the importance of avoiding waste within food. So you think about how food is not only transported, and some of the packaging has changed over the years on how fruits and vegetables are delivered, or even eggs are delivered to clients or to consumers. Just those small incremental things that we can do it's really about kind of eliminating waste within the system. And also, I mean, this dovetails into other themes in terms of kind of efficiency, but it's thinking about the packaging and whether plastics is the right choice, or are there new technologies that people can consider in terms of avoiding wasteful plastics as a form of packaging.
Definitely. One thing I would add, I'm a big seafood fan myself, but I think developing a more sustainable and efficient seafood offering is huge. Fish consumption has about 11% of the carbon footprint per calorie as beef, and I'm also a big beef fan, but I do see the merits in shifting diets towards a fish-heavy diet.
Yeah.
So once we solve the food and water problem, we're well on our way to solving the world's problems. But the next thing that we have to look at is energy. So we've got food, agriculture, water, but the next one of our themes is resource efficiency. So you guys want to talk about resource efficiency, what the opportunities are, why we have chosen that, and see that as one of our critical impact themes.
Yeah, and just to continue with the theme, I'll frame the situation and then hand it over to Brian for opportunities. But current CO2 levels are highest on record. I don't think this should be a surprise to anyone, but it's a pretty appalling chart to look at. We've had about a 20 times increase in extreme temperature events since just 1950. Our energy infrastructure, including the electrical grid, is terribly outdated, which creates inefficiencies and leads to wasted energy. And maybe I'll tee Brian up here, but why we call it resource efficiency, I think a lot of other people would just go directly to renewable energy, but we see sort of two opportunities, two sides of the equation. We see growing sustainable energy production, so that would be the traditional thought of renewable energy, but also decreasing wasted energy and funding companies that are looking to create more efficient ways to use our current energy supply. So I'll turn it over to Brian now.
Yeah, that's a great way to tee it up, Mitch. So there's the supply side, which historically has come from dirtier forms of inputs, so thinking of coal and gas and oil. to more abundant, essentially free forms of inputs in terms of generating power through the sun and through wind. The real challenge is, while we definitely see alternative energy taking a much more increased role in terms of the energy mix, both here in the United States as well as globally, forms of alternative energy aren't stable. So the wind generally blows at night when energy use needs aren't what they are during peak kind of daytime periods,
Right.
where the sun obviously shines during the day and not at night. But so these are nice systems that have some complementary benefits to one another, but we have a demand that is pretty static, and if either wind or solar or geothermal or whatever form of alternative energy you're looking at isn't producing the power needed by the grid, what are some other ways to kind of complement that mix? And so that potentially could come in kind of more traditional, hopefully more cleaner forms of fuel, thinking of kind of natural gas and different ways to kind of have immediacy on supplying power to the grid. That's a really important component. As it relates to how we go about thinking about deploying capital, it's easy to think of owning solar companies or wind companies as a really nice, convenient way to do that. Unfortunately, the return pattern on those companies have been very volatile over time. Depending on government subsidies, the price of oil in general,
Right.
it can provide for a pretty volatile return mix. And we certainly think there's times in the cycle that it'd be interesting to own these companies, and they definitely will present themselves in client portfolios. That's really not how it manifests itself in our portfolios for the most part. And Mitch already kind of pointed to it, and it's really focused on the efficiency side of things. That is a really interesting way that we can deploy capital in both public and private markets. A simple way to think about this is, 10, 15 years ago, when we first started doing our work around impact, semi-trucks, which move a healthy amount of goods across our country, there wasn't much thought in terms of the amount of power required to have those trucks move around. And as energy prices increased, you saw more of a focus on kind of how can we get more out of these semi-trucks moving goods around the country. And one simple solution, it's not super exotic or anything like that, was putting some kind of basically kind of plastic wind guides at the bottom of the truck that kind of reduce their drag as they're driving down the road. And so it's small things like that. And now today, you basically see every single semi with these plastic flaps kind of hanging underneath their trailers, and that's just to reduce wind drag, and it just improves the efficiency of that vehicle. It's not monumental, but even small things like that can have a meaningful impact.
Huge difference across the span of how many trucks are traveling daily.
Yeah, definitely. One thing I would say is everybody's favorite company, Google. I'm sure most people use their iPhone, which is, again, the search engine is powered by Google, thanks to the New Deal. But Google is running 100% on renewable energy, and I really think this is a trend that we'll see a lot of big corporations trending to in the future. As it's just really a way for companies to connect with their customer base and show them that they care about the footprint they have on the environment.
Yeah, and then thinking of just consumers and drivers, historically, EVs haven't been that big of a mix in terms of opportunities for consumers to drive more fuel efficient vehicles. And you're definitely seeing, obviously Tesla's the big kind of first mover in that space, but you're seeing kind of traditional automotive companies definitely taking much further of a look into providing
Volkswagen.
Solutions for consumers to drive electronic vehicles. And thinking back to my comment on the intermittency of alternative energy, as battery technology improves, that could be a solution to kind of capturing a lot of power when alternative energy sources are abundant, when it's really sunny or when it's really windy. We don't really have a system right now to capture that excess supply onto the market. looking down the road 5, 10, 15 years, hopefully we'll see more innovation and more solutions to kind of capture that energy when it's more abundant through very clean sources of energy.
Yeah, and one more thing I would add is EVs have been around for a while, but they are really becoming more cost competitive now as the energy generation is becoming cheaper, but especially lithium-ion batteries are really coming down in price. They're about a quarter of what they were last year in terms of cost.
Oh.
And I think being more affordable, it will be a catalyst for growth, but I would also point towards autonomous vehicles. I get laughed out of the room every time I talk about this. I think all my family and friends are sick of hearing me talk about it, but every company who's doing research and development in autonomous driving is planning to launch those with EV cars instead of traditional combustion engine cars, and I think that could be, as that gains traction, that will be a catalyst for a lot more conversion from traditional combustion engine to the EV setup.
Right.
Yep.
They're coming whether we like them or
Exactly.
not. Well, this is an area where I think people are really aware of the need for solutions. So that is exciting to hear about some of these solutions that are coming and that we have the opportunity to bring to our investors. So the last impact theme that we want to talk about today is life sciences and healthcare. So tell us about that theme and how we came up with it and what opportunities we're seeing in life sciences.
Yeah, this is probably one of the more obvious ones that I think you would see a lot of interest in, and it's really just about global population really growing across the board. You look at developed markets, whether it's Japan, Europe, and even the United States to some point. It's really about aging demographics, but also about radical innovation that's happening within these spaces. And so, to me, this is a kind of a no-brainer theme that we've had implemented in client portfolios for really 15 years and beyond, in both public and private. But Mitch, why don't you walk us through some of the kind of opportunities and different things to be thinking about as you're deploying capital?
Yeah, definitely. So the what we call the innovation pipeline is really at an all-time high. Healthcare R&D spending is again at an all-time record. I think it's around 100. It was around 175, 200 billion in 2018, and there really hasn't ever been a more innovative time in the life sciences sector. FDA approvals have more than tripled since the start of the century, and so there's quite a bit in the hopper for development. And one of the things I would say there is a lot of these are for rare and orphan diseases, which are obviously incredibly sad stories, but from the business perspective, there is a little bit more of a pricing power case there, and they tend to be high ROI investments for these companies. Another area to discuss is the Human Genome Project. So for those of you who maybe aren't as familiar with this, it was an attempt to map the human genome, which in layman's terms is sequence showing the sequence of DNA patterns for each person. So this was a late 90s, early 2000s initiated project that first when completed costed somewhere between $100 million and $2.7 billion to map the first genome, depending on what costs you factor in and what you don't. And a human has roughly 20,000 genes, and there's 3 billion different pairings. So this is truly a complex a complex project. But today, it costs about $1,000 for a person to go in and have their DNA sequenced, and there are just basically an unlimited amount of opportunities that this opens for healthcare and allows for future advancements and continued development in direct gene therapy, where a lot of the research is focused.
Yeah, and just to kind of get a little bit more into the implementation, I think of recent conversations that we've had with an approved manager that we recently brought through our process. And one of the conversations that we had with that manager was valuations. Valuations, just from a very high level perspective, look pretty rich within the healthcare sector and certainly within kind of the life sciences biotech area. And he made a really interesting comment and this is why we think it's so important to not only work with an active manager, but really a specialist manager within this space who can really have the kind of conversations with the executive teams of these companies and really understand how viable these companies are over the long term. But he made a really interesting point when we were talking about valuations, and he talked about a space, a pretty narrow space where perhaps 3 or 4 companies are all kind of trying to position themselves to really own that space. And the market today is ascribing basically a full market value to each one of those, basically saying all 3 of those companies could own the market when in reality it's probably going to be 1 or 2 of them who survive. And so we think it's really important for investors to really work with managers who are able to identify that next generation of winners and avoiding those companies who may have a really nice sales pitch, but there is no substance behind the actual story that they're telling to the marketplace that, frankly, passive investors are buying into.
Definitely. I think you hit the nail on the head. Domain expertise is huge. I think life sciences is the area more than any other area of the market where you really need someone who understands, in this case, the science behind these companies and is able to distinguish the very lofty expectations or fraudulent, in the case of Theranos, versus the companies that really have the science figured out and really have the ability to develop the drug that is going to get that FDA approval and going to turn a small group of scientists into a company that develops the next big drug that solves whatever.
Yeah, and it's interesting, just thinking from kind of a traditional long-only perspective, we've seen a lot of managers within the small cap growth space really kind of just give up on that space because they just don't understand it. The outcomes tend to be fairly binary. And so what you're left with is kind of these specialist investors that we tend to lean into, and just the passive market that's just blindly investing in these companies across the board, whether it's through a general index fund or an ETF that's perhaps targeted to this space. But again, just accepting the marketplace that they're coming up with the right valuations for these companies when they could just be way off base. And so I think generally we've seen the market kind of return variations across companies really kind of condensed to some extent. Within biotech, it's all over the place. So companies can be trading up 20, 30% one day and down a similar amount the next day. But the reality is there's a ton of opportunity for investors who really know this space and can lean into those companies that are going to be kind of those next generation winners and have really asymmetric outcomes from a return perspective. And this applies both to public markets and private markets. And you definitely would see this exposure being a pretty healthy overweight in our client portfolios.
And also, you really need to, when you're evaluating the different investors in this landscape in life sciences, you need to, there's another wrinkle you need to look at, and that's the ethical makeup of the investor.
That's a great point.
Right.
Because there's companies that you can invest in that are going to make a lot of money for investors, but could perpetuate some of society's worst problems. And so not only do you need to get an idea for how well they understand the science, how well they understand business and more broadly investing, but really their ethical and moral background and if they're investing for the right reasons. And that's a good way to distinguish the good from the great for what we're looking for in this area.
That's a great point,
Right.
Mitch.
Yeah, not an easy thing to navigate. Well, this has been really interesting with some great stories. The whole idea of impact investing carries with it some great stories, and the fact that we are finding these exciting solutions in all of these themes, from water, food, agriculture, resource efficiency, life sciences. I hope all of our clients and investors are as excited as I am to hear about them. Before we wrap up, do you guys have anything that you want to add?
No, this was great. This was we've worked really hard the last 9 to 12 months on our research in this space, and it's finally coming together, and I'm really excited, like you said, about the end portfolios we're building.
Definitely.
Well, I want to say a huge thank you to Bryan and Mitch for joining us today. I want to encourage everybody to go back and listen to both the first and second parts of our Impact Investing podcast series. This was the last podcast in that 3-part series, but I am sure we'll continue the conversation because there's lots more to talk about. For more information, you can always visit us online at arnerichmassena.com. We have a white paper called Impact Investing, Why, What, How that also has an executive summary and a short video about impact investing. So again, thank you, Bryan and Mitch, and thank you all for joining us today.
Great. Thank you.
Thank you for listening to Arnerich Massena's podcast. Please see the podcast description for important copyright and disclaimer information.